minutes of trade. Mithun Aswath is with us, managing partner at Kivah Advisors. Mithun, good to have you with us here. Thank you for your time. Do you own any defense names, PSU defense names, Mithun, in your portfolio? And what's the view there? There's that JP Morgan upgrade on the sector. Stocks have come off. Of course, you look at something like an HUL, it is up 10 times in the last 4 years, and it's come off about 30-35% from the top. But, and of course, I can sort of name others as well. Just your thoughts here on the space. It's getting more coverage and maybe a little better prices as compared to 6-7 months back.
Yeah, Afternoon, Prashant. I think on the defense space, we do have some selective opportunities which we continue to hold. They are PSU companies as well, but we also like power capital goods, which are public sector companies. We think that opportunity is also kind of a secular opportunity. They're coming off maybe 4 or 5 years where these companies were not even making profits, and they're way off their highs in terms of revenues. But on the defense side, I think there is secular growth opportunity. Valuations in some of them had got exaggerated. I think that correction has happened. I think one needs to disconnect the opportunity size and the valuation. Now, the opportunity size, I think, is very large. I think we are still touching the surface. There are private sector companies also which will benefit from this. Even there, the valuations have gone up quite a bit. But I think one needs to look at this space with a longer-term point of view. And whenever these deep corrections do occur, one can obviously take some positions.
Mithun, hi. Afternoon. Rima here. What about on food delivery, quick commerce, Zomato versus Swiggy? Both, neither, or one of the two?
Afternoon, Rima. Honestly, we've not invested directly. We hold a holding company across our client portfolios. So we played it like that because I think at that stage, we were still not sure of how this will evolve in terms of profitability. And so we continue to do it indirectly by holding the holding company of Zomato.
Okay. All right. So that's the take on quick commerce. So, Ashwath, what's the sense? Have you made any major changes in the portfolios in the last 2 months while we've been in this, slight cool-off and correction? Because the market's also gone through a churn, and suddenly the narrative is now coming back to capex stocks, which have fallen, defense, capex, etc., which have fallen the most in this cool-off period. What's your stance here?
Surabhi, there is lack of growth, and that is why markets corrected. Especially in Q1 and Q2, you didn't see too much of appreciable growth in a number of spaces, and that's why you saw a market correction. You saw it across the board. But if you say capital goods, defense, these companies continue to have strong order books, and growth is not really an issue. It's about execution now. If these companies are able to execute, they will still deliver growth. The pockets where there is concern, I think, are more sectors which are consumer-oriented. These have also corrected. We need to see maybe Q3, Q4, is there a rebound in the rural economy, which will again help demand perk up. We also have a wedding season, which is started in Q3. So there will be pockets where, even there will be growth. So I think the market is distinguishing between where there is some visibility of growth and where there is a lack of it.
Okay, by the way, a lot of ratings actions over Adani Group companies in the last couple of days, and the latest one is also coming in. So that's kind of completing the trio. S&P, Fitch, and now we also have Moody's taking specific actions on different group companies. And we'll flash out some of the specific lines that are being spoken of. And we've seen other commentary as well from Total to, of course, a couple of state governments that have been a little cautious on future contracts or immediate work with the Adani Group. So outlook has gone to negative on 7 of the group companies, and the stocks are noting that they are under pressure today. Okay, Mithun, just wanted to get your sense on financials. Before I ask that question, actually, let's just run through some of the commentary that we got from Shriram Finance. And this is a stock that's actually been doing very well. It's up almost 8% in the last 2 trading sessions, 5% yesterday. 4% today. Now it's cooling off a little bit, but the momentum has been fairly good in the past few trading sessions. What did the management tell us today, this morning on Bazaar? We had them on. One is that they are not seeing any slowdown in demand for vehicle financing. It's going on a very, very steady clip. Two, this whole threat of whether whatever is happening in MFI, could there be any kind of second or third degree spillover impacts? I mean, if there's one borrower which is defaulting on a bunch of loans, could there be any interconnectedness, even in things like used CV financing, used two-wheeler financing? The clear answer to that was a no from the management. They, in fact, went on to say that the credit cost, which is around 1.8% right now, will max go up to 2% and no higher than that. Quite optimistic on growth, saying about 18% growth is possible this year. And most interestingly, they also promised steady margins. They're not expecting any kind of a major compression in NIMs this year. So all around positive commentary coming in from Shriram Finance. Mithun, comment on this. Shriram has been a bit of an outlier. Some of these companies, some of these NBFCs, a bit of an outlier, because otherwise either growth has fallen because you're going slow on the higher yield business, which is personal loans, etc., or there is a bit of a pressure on margins, or there are issues on asset quality. It's a combination of 1, 2, or 3 for many other lenders. How are you looking at financials?
Yeah, to be honest with you, I think, Surabhi, you have seen concerns on the unsecured and personal loan side of the books of most banks and financial institutions. Obviously, MFIs have borne the brunt of this. But I think there are a few names like the one you mentioned, as well as the Murukaba Group finance company, where we've not seen too much of impact on asset quality as of now. So I think you need to focus now maybe on players who are good at risk management, because in the good times, everybody grows the balance sheet, but in terms of risk management and controlling credit costs is what is going to distinguish the companies. So I think that is where one needs to really focus their energies on, because you can just do growth, and then if credit costs balloon, then you've seen what's happened on the MFI side.
Okay, all right, Mithun, we'll leave it there. Thank you very much for joining us. It's a pleasure. Thank you for taking out the time and being here. I just want to